Welcome to True Forex Learn How to Trade. My name is Joseph and I'm the co-founder of True Forex Learn How to Trade Institute. So guys, in this video we will be going through our Forex course. This is a course that has 7 modules dedicated to helping you guys to become a Forex trader, basically be a better Forex trader and trade for yourself. This is the main aim of this course, is to help you to become a Forex trader, a better Forex trader, and most definitely know how to trade for yourself. Yeah. So the name of the course is called the Basic Forex Trading Course. Now let me just walk you through our disclaimer. Basically, True Forex Trading Learn How to Trade Institute is not a financial service company. We do not offer any type of financial services. We don't even offer any type of financial advice. Neither we don't do any type of investments or investment plans or investment schemes. We are just an educational institute. We teach people how to trade the Forex market, and then you trade for yourself. That is the main aim of our institution. And then the other thing, guys, that you must always bear in mind is that this particular program is designed to help you to become a Forex trader and trade for yourself, not to become a professional Forex trader or a professional trader. Now, the word professional trader, these two words, professional trader, they only apply for people who studied finance and who had gone through skills training, who had experience, and they had registered with the Financial Aid Board, and they've been credited, approved, and licensed. Then you would become a professional Forex trader. This course is not meant to make you a professional Forex trader, and again, we do not offer any type of certification after you complete the course. The course is just a skill type of a course, or a skill learning type of a course. You will learn the skills of becoming a Forex trader. Now understand that trading the financial markets is a high risk, and you must understand that whatever that you do in the financial market, it is your own responsibility, not our responsibility as True Forex Learn How to Trade. All right, now since we got that out of the way, let's begin our course. Like I said, our course is called Basic Forex Trading Course, and there's 7 modules in this course. And in this course, you will learn how to trade for yourself and be a better trader. Now, what does the course contain? Right, we have the basic of understanding Forex trading. We have Forex technical analysis, which will include fundamental analysis and the combination of the two. And then we have risk management, which you will learn how to apply risk management when you trade. We have psychology in trading. You will learn how to apply the psychological side when you trade, your psychological side, or the psychological side that is needed for a trader to become a better trader. You will also learn about the major currencies in the financial markets. You will also learn about the whole point of view of the history of stock market indices and the history of trading as a whole. Introduction to Forex Trading, Module 1. Now, Module 1 deals with what is Forex Trading. And then let's go through Lesson 1, Part 1. Forex exchange, popularly known as Forex or FX, is the trade of a single currency for another at the decided trade price on the over-the-counter OTC marketplace. Over-the-counter marketplace. Now, let me explain this this word right here, or this meaning right here. Over the counter, OTC, over the counter. What does this word mean? This actually refers to us forex traders. This refers to we traders that trade for themselves, right? The word OTC, or over the counter, stands for traders who trade their own money and they trade for themselves. And we use brokerage firms. We don't trade directly with the financial institution like big banks. We go through a broker to set up our trades. So the OTC system refers to us, right? And also professional traders, they are also included in this, because they are other traders who trade for financial institution, but they also trade for themselves, or those who have left the financial systems and they are trading for themselves. So OTC, over the counter, basically stands for us forex traders who trade for themselves. Pardon me for not underlining the straight line there. Okay, forex is definitely the world's most traded market, having an average turnover of more than 4 trillion each day. I think as a trader, you have heard of people talking about that forex trading is about a 4 trillion dollars market, right? Now basically what do they mean is simply it means that the overall value of forex trading per day is 4 trillion, right? It means that around the globe, around the world, every time when the forex market is traded, the money that exchanges the hands, it amounts to 4 trillion, right? This is the biggest financial market yet. No, this surpasses the stock market, it surpasses the index market, it surpasses the indices market, it surpasses the bonds and all this type of assets combined. So forex alone is a major market. That's why we have so many people trading this forex market, trying to get their hands on this piece of a pie, $4 trillion, right? So compare this to the New York Stock Exchange that has a daily turnover of about 70 billion, and it is very obvious how the forex market is definitely the largest financial market in the globe. So the stock market, the New York stock market, is about 70 billion. Now compare this to this, right? 70 billion to 4 trillion. How many times? I mean, it's a lot. So the forex market is the one that is lucrative more than any other market out there. So in essence, forex currency trading is the act of simultaneously purchasing one foreign currency whilst selling the other, mainly for the purpose of speculation. Foreign currencies value increase or appreciate, and drop, which is depreciation, towards one another as a result of a variety of factors such as economics and geopolitics. Now let me explain this part right here. I think this is the most important part of them all here so far, right? So what do they mean when they say you are trading the forex market? What is a proper meaning of this saying of trading forex market? Actually, when somebody says I'm a forex trader, they simply mean that they buy and sell currencies. That is what they mean. They simply mean that they buy and sell currencies. Now the question that will follow would be how do you do that? Do you walk into some kind of a bank or a store some shop that you would go and buy currency, and then you resell that currency back to that particular bank or a shop. How do you do that? Now, remember earlier the system called over the counter, OTC. This basically refers to electronical trading system, right? Back in the olden days, our grandfathers, they used to trade through telephone or walking directly to the floor and trading directly with the broker on the floor. So today, because of the advanced technology that we have, we use internet, we use softwares to trade wherever we are. So basically, purchasing currencies doesn't necessarily mean that you need to handle physical currencies. Doesn't mean that you need to go and walk into a bank and buy a physical currency. No. Yes, you can. You can go and buy a physical currency, but with this type of trading system, we use brokers, brokerage firms, and these are highly sophisticated companies which are run through software, technological systems that enables anybody around the world to just plug on their computers, download the software app or software system, and trade through that, right? Put your money in what we call a virtual account, and buy and sell currencies just like that. So what do you need in order for you to be able to buy and sell currencies? The first thing that you will need is the middleman, the broker, right? You will need a brokerage firm which is licensed and regulated according to the operations that are within the countries that they operate in. Okay, say for example you have a broker that is based in Australia. That broker needs to be licensed in Australia and regulated in Australia. And if they venture out to South Africa to tap the market in South Africa, they also need to be licensed and also be registered, regulated in South Africa to offer those type of services. So back to the question of how do we buy and how do we sell currencies? Do we do physical? Yes, you can buy physical currencies and hold on to them, and then later on you can still go and sell them in the treasury house, right? But with forex trading, mainly the OTC system stands for us dealing systematically, automatically with other institutions, right? We don't necessarily buy physical currencies, but we trade the value of those currencies, right, according to their respective country system. Okay, so basically what it means is that for you to become a trader, which this is not the only thing that you need, but it's just an explanation of how do you go about it. You would need a broker, right? This broker will enable you to trade those currencies. It's either you buy on their system and then you sell on their system, right? I think I have exhausted that part. So how do you then buy and sell a currency at the same time, right? Because you need to buy before you can sell. You cannot sell something that you don't own. Well, again, the system that we use to trade in the forex market is being designed to enable you not to trade the physical currency, meaning that you purchase a physical currency and it's been delivered to you, or you go, you buy it and you hold on to it and then you sell it later on. The system is made in a manner that we trade the value. Now, trading a value can be either two ways simultaneously. Some, they can sell at the time that you want to buy, and at the time that you sell, somebody can want to buy, and you yourself, you can do that. You can hedge. You can either buy or sell simultaneously, right? So it is because now we're trading the value, not the physical currency itself. We're trading its value. If the dollar is at about 14 rand to the South African rand, that simply means you can buy the dollar, $1 to the equivalent of 14 rand South African currency, right? And then you can resell that particular dollar again back to the market for the very same value, or you wait for it to appreciate, then you resell it, or it can depreciate, then you still resell it. That's how the system works, right? It's not a complicated thing. It's not a complicated thing. It's the simplest thing. So let's move to the other one here. The purpose of speculating. A lot of people, they like to say that if the forex market is all about speculation, guessing. Now, the word speculation, it means guessing, right? While we differ to understand, or we will argue to disagree, or we will disagree to agree in another sense. Now, if you saying that we are speculating, it means there's no analysis, right? Speculation doesn't apply in the same line with analysis. You don't speculate if you have analysis. For example, if a murder is being committed and an investigator comes through, the investigator needs to investigate to get proof so that they may present the proof before the court. And when the court looks at this proof, they can now rule or give a judgment according to what is on the table, according to facts, right? So it might happen that the ruling may not be in your favor, it can be against you, or the ruling might be in your favor and be against somebody else. But they did do investigation and they did do the analysis. So in the forex market, is the same thing. You are the investigator. You go out there, you investigate where this particular asset will go, which direction would it appreciate, or would it depreciate, right? So once you find out that this particular asset will depreciate, then you sell. Once you analyze and you find out this particular asset will appreciate, you buy, right? This depreciate, it goes down, appreciate, it goes up, right? You have done your investigation, so there's no speculation. All right, speculation simply means guesswork. You don't know, you have no analysis, you have no investigation, you just guess. For example, if an investigator will go to a crime scene and they just stand there and they look at the crime scene and they go like, what if it happens that this person was killed because of 1, 2, 3, 4? Then they go before the court and they say, well, I was standing there, it came to my mind to think that what if this is what happened. So the court cannot give a ruling on the statement based on what if is. They need proof, right? So when you analyze, you have proof that you think this market will go this way because you have proof. Once you present the proof to the market and the market disagrees with you, but at the end of the day, the ruling was made based on your analysis. That is how I see it. I don't know about you. Probably you will disagree with me on that one. So what influences a currency to depreciate or appreciate? Well, there are many factors, but the major ones, which we will learn later on, is based on what we call fundamentals. Now, fundamentals are factors such as your economical factors and also geopolitical factors. Now, it means that other currencies, they tend to move a lot when the high-ranking political officials of those countries, they do something or they speak, right? Other currencies, they don't move like that. Other currencies, they are motivated and moved by economical events, probably certain big banks or certain companies or CEOs or major major companies merging, or stocks of certain major companies, when they drop or appreciate, then they move the currencies, right? So currencies are not moved by the same elements or impacts or scenarios of the same countries. No, they differ, right? They differ. Situation differ right here. But most definitely, the major movers of the currencies in the world are economics or geopolitical events. All right. Okay, let's move on. The normal objective of FX traders is to make money from these types of changes in the value of one foreign currency against another by actively speculating on which way foreign exchange rates are likely to turn in the future. Here we go again, the word speculation. I've just tried to help you understand that it's not guesswork. You don't just sit there and look at uh, the market, and when the market goes up you buy, and then when the market comes down you sell. You don't do that. We don't speculate, we analyze. Okay, the word speculation, I could have added that word, put it out. Okay, so yeah, let me try to walk you through this paragraph here. um, the main purpose of you being a trader, especially forex trader, is for you to make money, right? And how do you make money? Like I said, you analyze, and then in the analyzing system we have two characteristics of analyzing. We have what we call technical analysis, which is focusing mainly on the charts. You give your probably 90% of your system on the charts, and then you give 10% to fundamental analysis. So we have two types of analysis. We have technical analysis and we have fundamental analysis. These are the characteristics of factors that can help you to make money in the forex market, not only in the forex market but as a trader in the whole system of trading the asset. Okay, now the word speculation there, like I said, doesn't suit the forex trading market very well. So uh, let's just leave it. So how do you know that the currency would go up in the future, or would it come down in the future? How likely possibly you would know? Like I said, you need to do your investigation. And what are the tools? The tools for you to do your investigation are: you need to analyze technically, and then you also need to analyze fundamentally. We will talk about these ones as we go through. In essence, forex currency trading is the act of simultaneously purchasing one foreign currency while selling another, mainly for the purpose of speculation. Forex currency values increase, which is appreciate, and drop, which is depreciate, towards one another as a result of variety of factors such as economics and geographics. So again, you can use certain events to understand if this particular currency would move up or it will go down. Like I said earlier, certain political officials within a country would talk, and when they talk you would hear a business analyst or economic analyst or this news anchor analyst in the financial market. They will talk about when somebody or so and so within a country said this and this, the value of the currency dropped or increased. That is another tip that you can use to analyze whether this currency would go up or it will depreciate when this type of events or factors take place. Okay. The normal objective of excess traders is to make money from this type of changes in the value of one foreign currency against the other by actively speculating on which way foreign exchange rates are likely to turn in the future. We just explained that one. In the contrast to the majority of financial markets, the OTC, which is over-the-counter currency market, does not have any physical place or main exchange and trades 24 hours every day via a worldwide system of companies, financial institutions, and individuals. I tried to explain this one earlier. I did explain that the financial markets as a whole, especially the forex trading market, the forex market, we do not have a place where we go and we buy physical currencies. What we do, we use softwares. We have companies that are designed or created or formed for the purpose of this type of business of trading, right? These are called brokerage firms, which are called brokers. So now what they are do I mean sorry what they are doing, what they do, their main job is to make sure that they link you with the higher financial institutions such as your Morgan and Stanley, Barclays, Bank of America, and then the Bank of Europe and the Asian Bank, Bank of China, and all those type of big financial institutions that you wouldn't be able you yourself to walk in and try to trade with them. So they do that on your behalf. Okay, so we do not have offices. Let me tell you the truth. I've heard in the past, and I kept quiet. I've heard people saying that they want to trade, they want to be forex traders, and there is a company which is a forex trading company. They want to go and register with that company, and they will become forex traders. And I asked them, "Do you mean like a school like us, through forex learn how to trade?" Do you mean? They say no. There's a company which can make you to become a forex trader. You go there, you pay them, and then you become a forex trader. I even forget what they say. So I was like, okay, there's no such a thing anyway. So most of them, they lost their money because of this particular scammers, right? Okay, sorry about that. Let's continue. Because of this, currency rates are continuously rising and falling in value towards one another, providing numerous trading choices. One of the important elements regarding forex popularity is the fact that currency trading markets usually are available 24 hours a day from Sunday evening right through to Friday night. So now let me explain this one. Like I said, we do not have offices. There's not an office called Forex Trading Office that you need to go and I don't know what you do there. There's no such. These are just schools or companies which we open as Forex traders ourselves. Probably will be selling signals. Probably those who are regulated, which are professional traders, they can open their own companies. They can do investments for you. You can go there, give them money, they can trade that money on your behalf. They do open their own financial institutions, savings, investment institutions. Those who are regulated, I'm talking about regulated people, and their companies are also regulated. You can work with them, but they are not forex companies. They don't control the forex market. You must understand it. Nobody controls the forex market except the big banks, right? There's nobody who has to lie to you and say that they are forex trading company. You must come to them and then you can trade the forex market. Without them, you can't. There's no such. Even brokers themselves, they know that if one broker gives you a trouble, there is another broker that you can go through and trade with them. There are many brokers out there. Okay, so basically this forex market is available 24 hours 365 days, including mainly Saturdays, because in other countries the forex market opens on Sunday around 10 or 11. So even on Sunday you can still trade. So the forex market is closed only on Saturday, right? So we can minus 1111 from that 365. So you would understand. So other markets, they close. For example, the New York stock market that deals with stocks, indices, futures, commodities, these ones, they close, right? They close down. But it's the only one market which is traded 24 hours, which is Forex, which is currencies. The word Forex stands for currencies. Foreign exchange means exchanging of currencies, buying and selling of different currencies from different countries. Okay, so buying and selling follows the clock beginning on Monday morning in Wellington, New Zealand, moving on to Asian trade spearheaded from Tokyo and Singapore, and ahead of going to London and including on Friday, concluding on Friday evening in New York. So I want to correct this. In South Africa, basically, I think the Southern African countries, going to the Middle East and West there, we are the first one to open the forex market because we are the first one to go through Monday earlier than any other countries, right? So with us, the forex market begins Sunday around 10 and 11. By 12 already the forex market is open in South Africa. So this one, it refers to the western side, not to us. To us, we are the first one, right? I've just said that. All right, guys, that is first part of our first lesson, the basic forex trading course. The first part was first module, what is forex trading? That is our first module, first part, lesson 1. So let's continue to part 2. Lesson 1. Still lesson 1, but part 2. What is forex trading? All right. The fact that prices are available to deal 24 hours daily makes certain that price gapping whenever a price laps from one level to another with no trading between is less, and makes sure that trades could take a position each time they desire, or traders could not trade, sorry, traders could take position each time they desire. So now, when you trade other markets, especially stock market shares, you would understand that Friday, when the market closes, it will close in a certain price level. Let's say, for example, you are in a trade, you are in profit, and the market closes on Friday by 10. The New York Stock Exchange closes South African time, that will be 10 p.m. Friday evening, Friday night. You are in a position, you are in profit, right? It closes at a certain price level. Trust me, Sunday around 10 p.m. again, South African time, 10 p.m., 11 p.m., when the market opens, the Australian market opens, you would see there is a gap. The price will not open where it previously closed on Friday. Why? We'll learn about that as we go in our advanced classes. You might find out the price had moved to a different price level and you are now in a loss. But on Friday, you are in profit. On Sunday, you are in a loss. In the Forex market, there's no such a thing. Once the price closes a Friday evening around 10 p.m., once the price closes there, Sunday evening 10 p.m. or 11 p.m., it will reopen exactly there. There's no gaps. Okay, this refers to that. There's no gaps at all. Okay, there is no gaps at all. Okay, irrespective of time, even though in reality there are particular full occasions when volumes tend to be low, their daily average, which could widen market spread. Forex is a leveraged or a margined item, which means that you are simply required to put in a small percentage of the full value of your position to set a foreign exchange trade. Because of this, the chance of profit or loss from your primary money outlay is considerably greater than in conventional trading. Now, forex trading again has many advantages and it has its own disadvantages, and the disadvantages are major. They can cost you a lot. Now, for example, I'm trying to explain. Let me go to the second paragraph. Irrespective of time, even though in reality they are particular sorry, there are particular occasions when volumes tend to be below their daily average, which could widen the market spread. Okay, in trading, we have this thing which we call spreads, right? Again, we will learn about spreads as we go on. There are these things that we call spreads, right? Now, spreads are what we can call systematically usage of brokers, right? The broker, they use spreads to determine the middle price between the buying price and the selling price, and they use that as their gain profit. Okay, they use that as their gain profit. So spread plays a major role when you trade. First of all, before you trade an asset, look at the spread between. Now, how do you get to know the spread? The spread is the difference between the bid and the ask. It's the difference between the buying and the selling price. Okay, that's the difference there. Okay, the number that you get in the middle, that would be your spread. So be on the lookout every time when you trade. Before you put a trade, what is the spread amount? Because the spread is an amount that will be minused from your actual trading position amount, right? Whenever you punch in buy or sell, there would be an amount which is minused from that particular initial amount that you would be buying or selling at. Okay, so sometimes during the day when you trade at the certain hours of the day, you would realize that your spread is wider, right? That is another factor that could be controlled by the what we call the system of a particular country, okay, that the market is under at that particular time. That is the best way I can put it. I don't know whether you would understand this. And the other thing on top is that spreads also can be close when you trade in a particular market. Okay, simply the New York stock market, when it opens, certain assets, their spread widens, and certain assets, their spread closes. So let's say, for example, you trade the GBP currency against the GBP JPY, right? And then now you are trading at the Australian time. You'd find that the spread is wider, way wider. Then you ask yourself, why is that, right? But during the day when the London market is open, you find that the spread between the GBP and GPY is closed. But when you trade at night in our South African time, the spread is wider. Like Sunday night, the spread is wider. But later on, around 1 and 2, you find that the spread closes. We will talk about why is that the case. All right, guys, let's leave it at that. This is module 1, which we had completed, and then we have done lesson 1, and then we have done part 1 and part 2. So yeah, thank you very much, guys, for joining us, and I hope that you have learned a lot. Where I've done a mistake, I'm not perfect. I am not here to say I know everything. Probably when I've been trying to explain or speaking like this, there are many of you who are saying, no, I don't agree with you there. Yes, teaching is all about that. Especially teaching something that you didn't create, you learn also. I learn also these things. I learned these things from somewhere else, right? And I'm not saying that I'm perfect. It doesn't mean whatever I've said here is 100% like that. Yes, it could be, but to other people it is not. Okay, but if for you understand, you took this and now you can go like, oh, now I understand. Now it makes you a better trader. Remember, our introduction was that this would make you a better trader. I'm happy if you're becoming a better trader. Next time we'll be moving to module 2. I think it's module 2. Yes, module 2. It will be evaluation of stock exchange, introduction to Forex Trading. Is it still module 1? Okay. we'll look at that. I think it's still module 1. Sorry, still module 1. Introduction to Forex Trading. Yes, it's still module 1, but we will be moving to evaluation of stock exchange. Thank you guys for joining me. I hope this is not too long. I hope you have learned something. It's Joseph signing out from True Forex. Learn how to trade. Have a blessed day.